You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 15th day of October, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first broadcast is private, members only, and those who are taking their 1-week free trial. When Michael joins us in about 50 minutes, he'll walk you through, step by step, how to sign up for the trial. There's no credit card required. And even though it's already Tuesday, don't worry, you'll still get 5 consecutive trading days. The weekend doesn't count against you, but you will have access to the indicators over the weekend. And there are some markets that trade over the weekends and holidays. Some markets never sleep. Now, when the live training room ends at 11:30 a.m. Eastern each morning, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which, unlike the morning broadcast, is open to the public. Everybody everywhere on planet Earth with an internet-connected device. Now, if you're joining via the YouTube channel, keep in mind, I'm not able to monitor that question box until Michael arrives about 50 minutes from now, okay? Once he's here, then I can turn my attention to the YouTube channel. However, you can do it this way going forward, and you won't have that issue. Go to mytradingiq.com, scroll down to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In the email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit of doing it that way is you will have access to the question box as soon as the broadcast starts, so you can ask questions and participate in the discussion. Of course, there will be days when you're out of the office, away from the desktop, but you still want to join live. And some days you'll be busy, can't join live, but need to get caught up later. I'm talking about our YouTube channel, youtube.com/CFRN. It's really easy to remember. You already know the YouTube part, so just remember the /CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. And thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, But just pick some days at random, okay? And see, maybe pick a day a year and watch a little bit. See how we have evolved over the years and how our strategy, our methodology, our indicators have gotten simpler and simpler and simpler. And if you're tuning in via the YouTube channel, now I'm going to sound like every other YouTube hack. Smash the like button. Smash the subscribe button. Okay? That helps us with the YouTube algorithm. More people see the channel. You know the spiel. You hear it on every podcast you ever listen to. And by the way, there's a great podcast coming up. I don't know if it's happening today or not. But Madam Vice President is going on the Joe Rogan show. Boy, talk about Daniel and the Lion's Den. Nah, that's not a good analogy. It's going to be interesting. I'm going to bet at some point she gets mad and walks out. I don't know. I could be wrong. It happened in the 80s once. So, we'll see. Just Google the Joe Rogan Experience, and I'm sure there's all kind of advertisements out there for the Kamala interview, if she shows up. And I'm sure he's been given a list of questions that he's allowed to ask. See, Joe, I don't know. I don't know if he'd buy into all that. He might agree to it, but then he's going to start asking real questions and demand real answers. Not the word soup, not the word salad, but real answers. Over here you see our daily schedule. We start out with our daily devotional, word of prayer, some news, a recap of the logic alerts, the concierge trade alerts. And then about 12:50, that's 50 minutes into the broadcast, Michael joins us for a recap of what happened this morning in the live training room, which you can be in tomorrow morning. If you're not already a member, just take the free trial at mytradingiq.com. Again, Michael will walk you through the process. It's very simple. We'll get your indicators up and running today. You'll be fine. Then we'll do some live trading on the TradingView platform from 1 to 1:30 Eastern. And I'll wrap things up with our good word for the day. So that's the deal. That's how we do it around these parts. Topic of our devotional this week, we're actually in day 5 of 7. What is my purpose? You ever asked yourself that? I'll tell you. Learning to love God and love others. Jesus said that all the laws, Moses had over 600 laws, all the laws hang on those 2 pegs. Learning to love God and love others. Today's scripture, Colossians 3, verses 12 through 14, and I'm going to share with you from the Message translation. Starting in verse 12. So, chosen by God for this new life of love, dress in the wardrobe God picked out for you. Compassion, kindness, humility, quiet strength, discipline. Be even-tempered, content with second place, quick to forgive an offense. Forgive as quickly and completely as the Master forgave you. And regardless of what else you put on, wear love. It's your basic all-purpose garment. Don't leave home without it. Actually, it says never be without it. Colossians 3, verses 12 through 14. So let's talk about compassion. That's our focus today. The transformational love of God calls us into a life of love, one that is primarily marked by compassion. Before you move on, spend some time visualizing what it looks like to live compassionately. Henry Nouwen, who you probably never heard of, wrote this. Compassion asks us to go where it hurts, to enter into places of pain, to share in brokenness, fear, confusion, and anguish. Compassion challenges us to cry out with those in misery, to mourn with those who are lonely, to weep with those in tears. Compassion requires us to be weak with the weak, vulnerable with the vulnerable, and powerless with the powerless. Compassion means full immersion in the condition of being human. Now, I want you to put that in the context of what we've seen happen over the last few weeks with these hurricanes. And I'm not talking about all this noise on TV. FEMA showed up. FEMA didn't show up. Oh my goodness. But what I just read you, it was written many years ago by Henry Nouwen. Enter into a place of pain. Share in brokenness, fear, confusion, and anguish. Now, I know that many of us aren't able to physically go there and help. We have families, we have jobs, we have commitments. Convoy of Hope, Samaritan's Purse, Compassion International, those are trustworthy places where you can send your money and a large percentage, more than 90%, actually gets to the victims. And you might say, well, why don't they get 100%? There are administrative costs to running any kind of organization, nonprofit, or business. But when you associate yourself with those who manage to keep it to 10% or less, that's a good deal, okay? Now, when your phone rings and it's Joe Blow from ABC Hurricane Tragedy Charity, you're about to get scammed if you pull out your credit card. Don't do it. I know I keep saying this, but I'm telling you, the scammers are rampant out there right now. They live for times like this. It's never more easy to pick someone's pocket than when they see people on TV crying who've lost everything, their homes, their livelihoods. Don't let it be you. Now, by Jesus' standard, our purpose is not achieved by how much money we can make, the materials we possess, excellence among our peers, or career achievements. It is the measure of compassion that flows from us and extends to others, regardless of the individual, situation, or circumstance. What would your life look like if this kind of compassion radically defined it? What would be the same as it is now? What would be different? As you contemplate the Christian calling and purpose of compassion, join me in a word of prayer. Heavenly Father, you've called us to clothe ourselves with compassion, kindness, humility, gentleness, and patience. Help us to bear with one another and forgive as you have forgiven us. Above all, teach us to put on love, which binds us together in perfect unity. May your love dwell in our hearts and guide our actions so we can reflect your grace to everyone we meet. We lift up these hurricane victims to you. Comfort those who mourn, heal the injured, and provide for those who have lost so much. Strengthen them as they face the difficult journey of rebuilding their lives. Surround them with support, and may they find hope in your unfailing love and care. God, we ask that you be their refuge and strength in these times of trouble. We continue to pray for peace in the Mideast. Bring an end to violence and suffering. Protect the innocent who are caught in this conflict. Soften hearts and open paths for reconciliation and healing. Guide leaders to pursue justice and peace, and let your love and mercy reign in this troubled region. May your peace prevail where hatred and war have taken hold. And Lord, as we approach this upcoming election, right around the corner, we ask for your wisdom and guidance. May every voter seek truth and justice and be able to make it to the ballot box. And may the leaders chosen be the ones who will uphold righteousness, integrity, and compassion. Guide our nation through this critical time and help all citizens to participate with a spirit of unity and peace. May your will be done, and may your hand guide the future of this nation. One nation under God. It's in Jesus' name we believe and pray. And everybody said, amen. Amen. Happy Tuesday. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow down 126 points. The NASDAQ down 153. That's almost 1%. S&P 500 down 22. The Russell 2000, our man in the street, is up 12 points. Now, we like to see all four of the major indices the same color. We don't care if they're red or green, because we primarily trade futures. And with futures, you can be long, short, and long again, all in the same hour, if that's what the chart in front of you tells you to do. When they're all the same color, that's when you have better follow-through on your trades. Example, Michael took a little time getting the goal for the day this morning, but that's okay. He hung in there, and he got it. In the commodity basket, I got a suspicion that by the end of this broadcast, Russell just might be in the red. Now, it could be leading the way out, but we'll check again at the end of the broadcast. In the commodity basket, crude oil down another $3.63, trading 70.20 last. That's a drop of almost 5% in one session, or $3,610 per contract traded. Gold is actually positive today, up $18.60, trading 26.8420 last. Silver, go silver, or is that hi-ho silver? Silver's up 45 cents, trading 31.77 last. That's a gain of almost 1.5%, or almost $2,500 per contract traded. In the Asian markets at the close, the Nikkei posted a gain of 304 points. The Shanghai dropped 83. The Hang Seng fell 774. Now that's a drop of almost 3.75%. And in the European markets at the close, FTSE down 43, the DAX down 22, the CAC down 80. And for the CAC, that's a drop of a little over 1%. So we had a mixed day in Asia. It was a red day for the UK. And as I mentioned, it is a mixed Radio Tuesday here in the US of A. Got three of the major indices in the red: Dow, NASDAQ, S&P. Russell still hanging on to 13 points of green. In the news, what do we got? NASA. NASA launched its Europa Clipper spacecraft yesterday as part of a $5.2 billion mission to detect conditions for life on one of Jupiter's 95 moons. And it's called Europa. The mission is NASA's first to Jupiter since 2011 and the product of a years-long partnership with, you guessed it, SpaceX. The launch on SpaceX's Falcon Heavy rocket took off at 12:06 p.m. Eastern Time from Cape Canaveral. The nearly 13,000-pound, 100-foot-long spacecraft will travel 1.8 billion miles to arrive in Jupiter's orbit in April of 2030. I have a hard time planning what I'm going to do tomorrow. It will make 49 flybys of Europa once every 3 weeks over roughly 4 years to observe the icy moon's composition. The instruments it will use include radar to penetrate Europa's 10 to 15 mile deep ice sheet, anticipating a deep, salty ocean underneath. NASA's mission comes after the April 2023 launch of Europe's JUICE mission to explore 3 of Jupiter's moons, Ganymede, Callisto, and also Europa. The JUICE spacecraft will reach Jupiter in July of 2031. I guess they have a little slower model. And spend 4 years orbiting the planet and its moons. NASA's spacecraft will arrive first using a cosmic piggyback. And don't ask me what that is. The trial of Nima Moment, a tech consultant accused of murdering Cash App founder Bob Lee, began yesterday in San Francisco, more than 18 months after the 43-year-old tech executive was found fatally stabbed. Emini is accused of planning an attack April 4th, 2023, tied to a dispute over his younger sister, Khazar. Surveillance video shows Lee entering a condo building where Khazar lives with her husband. Lee and Emini then leave the building together around 2 a.m. local time and drive off in Emini's car. Lee was found stabbed around 2:30 a.m. in the Rincon Hill neighborhood. Prosecutors allege Emini took a knife from his sister's apartment, drove Lee to a secluded area, and stabbed him 3 times before fleeing. The defense argues Lee, under the influence of drugs, initiated the confrontation, and Emini acted in self-defense. Emini has pleaded not guilty. If convicted, he faces 26 years to life in prison. Trial is expected to last until mid-December. I don't know if you use Cash App. I don't know if is it still working. I guess it probably is. Okay, markets. We'll get to the charts in just a moment. The biggest banks staged a broad Wall Street rebound in the third quarter as corporate clients got more comfortable issuing new debt and pursuing mergers, and some traders recorded one of their best quarters in years. Goldman Sachs said Tuesday that its investment banking fees were up 20% from the year-ago period. Bank of America reported its highest third-quarter trading revenue in more than a decade. And Citigroup's investment banking fees were up 44%. Executives at these banks are optimistic. Of course they are. They just got a huge bonus. At the start of an interest rate cutting cycle at the Federal Reserve, which last month reduced its benchmark rate by 50 basis points, will mean more deals in the near future. I said it yesterday, and I'm going to say it again. I'll probably say it every day. When everybody's telling you to buy, an old fiend for that high can often cost you a fortune. But I don't give personal investment advice, so do what you will. Now today, as an example, U.S. stocks took a leg lower as investors reacted to downbeat earnings from ASML. Holding that dropped ASML that dropped a day earlier than expected, sending chipmaker stocks lower across the board. Shares of the leading semiconductor supplier sank around 15% after its earnings released, and an apparent error showed a disappointing sales outlook for 2025. Don't you hate it when you're trying to cook the books and you let the pot overboil? Nvidia shares fell in tandem, dropping around 4% to slip back from their freshly minted high. AMD stock also dropped about 4%. Walgreens. Now I got two Walgreens one within a mile of me and another within 2 miles of me. And I've mentioned on this broadcast before, the one closest to me closed. The building, it's a freestanding building. It's up for sale for $5 million. I want that building. Not sure what I want to do with it, but I'd sure like to have it. It's on such the location is incredible. The traffic count on that corner is ginormous. And right across the street is a high-density apartment complex that has about 5,000 tenants. I just need somebody. I should talk to Ronnie. Ronnie's a real estate guy. Anyway, Walgreens said on Tuesday it would shut 1,200 stores over the next 3 years as the new CEO, Tim Wentworth, plots a turnaround at the struggling pharmacy chain operator hit by sluggish consumer spending and low drug reimbursement rates. The company narrowly beat Wall Street's lowered estimates for fourth quarter adjusted profit and forecast fiscal year earnings that were mostly in line with expectations. Now, they're closing 1,200 stores and their shares jumped 12.3% on the news. Now, the stock has fallen 65% this year, making it the worst performer on the S&P 500 index. That's going to go bye-bye and get replaced with a strong, healthy company. Apple stock rose to a record high today, extending recent gains fueled largely by optimism that the company will gain from the rollout of artificial intelligence-powered iPhones. I think a lot of people are afraid of these phones. We had an article last week, iPhone sales were down, and the PCs that are now being shipped with artificial intelligence, I'm sure people will adjust to them eventually. Remember the Jetsons when you were growing up? That was a cartoon way ahead of its time every Saturday morning. Now, let's talk about the backbone of America. Small business owners are growing more uncertain about the economy ahead of the presidential election and are reining in spending, according to a new survey. The National Federation of Independent Business Optimism Index edged up 0.3 points in September to 91.5, but the Uncertainty Index rose 11 points to 103, the highest ever recorded. While inflation is cooling and the pace of hiring appears solid enough to support a growing economy, small business owners still have a tougher time than bigger businesses holding on to workers and dealing with rent and other costs. I said this years ago, and I stand by it, the day is coming when you will bank at Amazon. You will get your prescriptions at Amazon. You will buy your groceries at Amazon. You'll get your car repaired at Amazon. You'll buy new tires at Amazon. And on and on and on. Maybe we don't see it all in our lifetime, but global domination is on the agenda. All right. Logic 247. For anybody new, that's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude, silver, gold, euro, bonds. Over the last 323 weeks, we've issued over 18,000 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out, based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Now, last week, we ended up with 10% stopped out. Yesterday, we started the week with 33% stopped out. Now we're down to 21%. So we still got 3 more days. If we were to close the week above 20%, which has happened a couple times, it wouldn't peg the needle on our weekly average over 323 weeks. Now, this week, since the market opened Sunday night at 6 p.m. Eastern, we've issued 21 alerts. At the time Valerie did the recap, 7 a.m. Eastern this morning, we were still waiting on the outcome of 7. Plus, I've added additional alerts since she did the recap. She'll update it this afternoon, sometime between 3 and 5 p.m. Eastern. So at the time she did the recap, we had 14 actionable alerts, of which 3, or 21%, would have been stopped out, again based on market structure and the very simple process that we teach all of our passport holders. Now, the logic alerts are not designed so you can just trade them and not have to learn how to trade. The purpose of the logic alerts is to teach you how to read a chart, how to find windows of opportunity, how to know where to anticipate potential resistance and potential support. So many traders attempt to become traders without ever truly learning how to read a chart. When you become a member, once you've been with us a couple weeks, you should be able to look at a 30-minute chart where all alerts are created and instinctively know what the next high probability move is. Obviously, 20% of the time, the market doesn't do the next obvious high probability thing. That's the truth about trading, okay? But over 323 weeks and over 18,000 alerts, are we happy with a 20% or less weekly average? Very happy, very grateful, okay? Just make sure you use the logic alerts as they're intended. It's a teaching tool. If you'll use them as they're intended, within a couple weeks, the clouds will part and you'll go, oh my goodness, why couldn't I ever see this before? I'll tell you why. Because you didn't have anybody to teach you how. It's that simple. Now, our original alert service, long before Logic 247, concierge trade alerts. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m., because futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. However, concierge trade alerts don't come out around the clock. They're posted as a static report shortly after the Globex open each evening. I told you yesterday that I was going to wait a little bit. I normally try to get them out as quickly as I can after 6 p.m. Eastern, but because we're in earnings season, sometimes you'll get a gap at the open at 6 p.m. Eastern. Okay? So probably till earnings season is over, I'll be putting them out about 6:30. Okay? Unless there's no gaps across the markets we cover, then I'll go ahead and get them out. If you're a member or trial member, read this information. It's important that you understand it. Don't understand it, then ask. Be happy to explain it. Okay? Now, every one of our traders and trial members had every one of these targets, every one of them, last night at 6:30 p.m. Eastern. So let's go where we always go. Daily chart of the S&P 500 E-mini futures. Now, as you can see, the fibs go from the April 19th low to yesterday's high at 59.1850. I'm off by 2 ticks there, but I can live with that. Today's high is 59.1550. So we got a new all-time historic high. I mean, we've had several. Here, 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 here. Now, we're up against the 50% fib extension. Traded a little bit above it. The next obstacle is the 62% fib extension, the 100% fib extension. Okay? Retracements are where the market is most likely to find support on its way down. Using the same 14th century math in a different manner, you can use that math to project into the future where the market is most likely to find resistance. Okay. Now, why the S&P and why a daily chart? The S&P is the bellwether of the indices. Wherever the S&P goes, the others will eventually go as well. Sometimes, the Dow, the Russell, the NQ may get out in front of the S&P or lag behind the S&P, but at the end of the day, week, month, whatever your measuring stick is, they're going to follow the leadership of those 500 large cap companies. So, whether you trade the S&P 500 E-mini or some other futures contract or stocks or crypto or Forex or ETFs, if you'll spend 2 minutes with the daily chart, you're going to gain some very valuable information. Okay? Now, what does our chart tell us today? Okay, institutional traders, they look at daily, weekly, and monthly charts, the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has to do with account size. Because of their account size and the size they trade in, they're the ones who actually move price. We serve as their liquidity, but that's okay. Our strategy and our indicators are not designed to outsmart the institutions with their infinite resources, but to help you understand what they're doing, put it in proper context, because then all you have to do is what the deep pockets are doing long enough, get your goal for the day, and then have the discipline to put the mouse away. So what do we got? We got a red candle. Are we on the low of the day? Let's see. It's like 58.85 there. What's the low? 58.77. So we're a little off the low of the day, but not much. So, number one, looking at the daily chart of whatever you trade, you're looking over the shoulder of the deep pockets that move price. With a red daily candle, I don't have much interest in long trades, okay? I'm going to look at this for 2 minutes. I'm going to identify where resistance is and where major support is. Major support is right here at the 38% fib extension and the daily step line. Below that at blue and climbing. Below that at the 24% fib extension. I'm going to jot those numbers down. They're very important, okay? Then as I go to my smaller time frames, I'm going to be looking for opportunities to short the market. I prefer to trade the S&P 500 E-mini. Some love the NASDAQ. Doesn't matter what you trade. Future stocks, crypto, Forex, ETF. A free look over the shoulder of the deep pockets who move price. And the more you do that, the more you practice that, the more you make that part of your daily routine, the more valuable it will become to you, okay? You start picking up on little things and like, oh, wow, yeah, It's low now. Low of the session, 77.5. And we're going to go here. And so we're off the low of the session. Here's the low, 58.77.5. We've now pulled up to resistance. All right. As I said, all alerts are created on a 30-minute chart. These are the weekly trading zones, which are published every Monday morning at 6:15 a.m. Eastern. This is Tuesday, this is Monday, back here is Friday. Last week, we had a different set of weekly trading zones. The new zones come out every Monday morning, 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. They become like a guiding light. They help you stay on the right side of the street. And you know where you're going to find potential resistance and potential support. Now, when price hits a weekly zone, 70% of the time you're going to get consolidation. 20% of the time you'll get rejection. 10% of the time you'll get the slice. See how this candle sliced through the zone on the 30-minute chart like it wasn't even there? Well, when that move ran out of steam, price retraced back to the zone it sliced through and continued in the direction of the slice. only one of three things happens at a weekly zone. It's important. We get them out to you at 6:15 a.m. Eastern, so you can get them on your charts before Wall Street even wakes up for the week. So off the open last night, we ran right into blue and climbing, and we know that when blue and climbing gets above price, that's potential resistance, because it's probably on its way to becoming red and falling. Now, the indicators call the CFMA1. I refer to it as blue and climbing, bullish, red and falling, bearish. And you see how we just pulled up to red and falling, and we found resistance. Whenever price finds support, it's going to go look for resistance. When it finds resistance, it's going to go look for support. That's just how markets work. And that's what consolidation looks like. Like that. Okay. Here we sliced through, and then we retraced all the way back up to 93 1/4. We missed touching the zone by 3 ticks. Okay. Now, I said that once you've been with us a couple weeks, you should be able to look at a 30-minute chart and with a great deal of certainty know what the next high probability move is. $58.82 down to $58.80. Okay, so we want to see a break of this low, and then we're out with our goal for the day before we get to this area of potential support. So the market opened last night with resistance overhead. That resistance finally took us below the BBC just for a little bit. Okay, and then we attempted another rally at 9:30. That is a very small 9:30 candle. Okay, typically the 9:30 candle on Wall Street on a 30-minute chart is the biggest candle of the day, most days. See yesterday, that big candle? That's what you get most days. Okay. Anyway, price got below the BBC. The green line is the BBC. Stands for bull, bear, cross. When price crosses above the green line, we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices. See how price is below? So our anticipation is for lower prices. Okay. So we came down, we sliced the zone and hit the target, and then we missed the retracement back to the zone by a couple ticks, but that's okay because you already got your goal for the day, hopefully. Now remember, all of our members and trial members had these targets last night at 6:30 p.m. Eastern. On the Dow, we have the same scenario. Blue and climbing, red and falling. Okay. There was just no upward price movement. Then we got below the BBC. And notice this pullback held, and this pullback held, and this pullback held. We know eventually it won't hold, and it'll trade through. That keeps the markets fluid and tradable. But look what happened. We got a leg, we got a retracement, and the pullback held. And then we got a leg. Now notice on this slice, we had a lot of slices this week, more than normal. We retraced right back to the zone we sliced through, continued in the direction of the slice, and found support at the weekly trading zone. Again, when price rallies up to a zone, we're looking for resistance till proven otherwise. When price drops to a zone, we're looking for support till proven otherwise. So price pulled all the way up to the zone. That's potential resistance. and the BBC, that's potential resistance. So this was resistance times 2. Great opportunity to get short. And if you want to be ultra conservative, come down here. Let's call it 43,080 to 43,050. That's 30 points. It only takes 20 points to get your goal for the day. Okay. Now, this low right here, see this bullish cross? When the blue line gets above the green line and it leads to an extended move, the first time price revisits that area, and it is an area, it will almost always be good support. And it sent it all the way back up to the zone. But the next time down, it overcame it. Okay? If you're new, you'll learn more about it over time. All right? Russell. Remember, the Russell was the only index in the green. Here's where we opened last night. Now, price always reverts to the mean. What does that mean? It means price. In our case, the mean is green. We call it the BBC. You're going to get a leg and a retracement, a leg and a retracement. The price is always going to come back to the BBC. So we consolidated at the zone like we do 70% of the time, right? And then we got a drop. But we didn't make it all the way to the short target. We approached the area. Now, it's typically right on the money, but buyers came in a little bit early. We got a leg, retracement, pullback held. Got another leg and another slice. This is highly unusual, but that's okay. As you can see, this candle sliced and came back to the zone. And now this, because it's run out of steam, it's coming back to the zone. Okay. All right, Michael has arrived, so we'll pick up with the NQ when I come back. Michael's going to give us a recap of everything that happened this morning in the live training room. Then we'll do a little live trading on the TradingView platform. And as I said, I'll come back and I will finish the recap of the alerts and close it up with our good word for the day.
Excellent.
And at this point, I'm now able to monitor the question box in the TradingView channel. So if you have any questions and you're watching via TradingView, ask and I'll relay them to my. All right, looks good.
All right, here we go. Good afternoon, everyone. Today is Tuesday, right? Tuesday, the 15th day of October, 2024. If you've not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for your trial. Click on that, and you'll be sent to this registration page. Right? Yes, this registration page, where all we ask for is your name, your email, your phone number. Down here, fill out the multiple choice questions. Right, there's only 5 of them. And if you are using NinjaTrader, give us your machine ID, and we'll set up your charts for you. If you want to use charts on Ninja, if you're not using charts on Ninja, we don't need your machine ID. Okay, if you're using TradingView, just give us your login ID, and we will be happy to set you up with TradingView. Now, I really highly recommend you get TradingView because that's where we have all of our indicators. NinjaTrader just has some, DT Pro just has some, but TradingView has all of them. So, if you would be so kind, is to go to TradingView and get a demo there. I mean, to do that, all you need to do is go here to our website, mytradingiq.com, click on trading platforms, and watch this little video right here. It's pretty self-explanatory. Click on this link right here. All right, and that will get you what you need. Right, that will get you what you need. That just reminded me of something else. 2 other things. Hang on, let me just write it down. what's that? Cheers. It's another flight going out to the mountains. You hear that? Anyway, that's all you need to take the free trial, right? You want to get TradingView because we have all the indicators with TradingView. All right, so if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. I had a pretty good day today, but it started out really rough. I'm not going to lie. It was rough in the beginning. You had to keep trading to persevere. I almost had it on the very first trade. The very first two trades. I should have had it for sure on the very first two trades, and I'll get into that in just a minute. But what we ended up with was 54 on the NQ, 22 on the Russell, minus 30 on the YM, and plus 14 on the ES. That put us at plus 405 on the morning session. Today it took 59 minutes and 10 trades to get to the goal for the day. At that point, we're up $1,150 with 10 contracts on. And we took a total of 20 trades this morning. So on the month now, we're at $8,492. That's over 11 business days, averaging $772 per contract per 2-hour business day. On the year, we're at $94,630. That's over 194 business days, averaging $487 per contract per 2-hour business day. Now, the 2420 blueprint, what that means is if you were to add one contract per month, you have to work your way up to adding that contract. But if you had one contract per month and you quit trading when you hit the goal for the day, eventually you would be at 20 contracts. The goal is to get there over 24 months. I did it over 20 months. I did a 2020 blueprint, but I didn't have to go through the training portion of it. Okay. So far this year, if you started with one contract and you added one contract per month, you would have had to work 57 hours if you did it just like me. And you would be averaging right now $2,642 per hour. Okay. If you quit trading when you got the goal for the day, that's where you'd be. All right. Let's get into the trades. Now we'll start out here with YM, which kind of had my number today a little bit. And we did end up negative on the YM, didn't we? On the YM, we did. It doesn't look like I have all my trades in here because, oh, they're there. I guess I do. Okay. Our very first trade on the YM was right here, and it did go 20 ticks into profit when they got 10 out of that. All right. Then right after that, we stopped out here. That put us at minus 15. And then we stopped out again right there, and that put us at minus 40. And then we picked up 10 ticks right here. That put us at minus 30, and we had a break even on this one. That was how we did it all day on the YM. During the break, it looks like there was one more trade right here. Actually, this wasn't even during the break. There was one more trade right here that I didn't get. It looks like if I would have gotten it right here, it would have stopped me out right here. Pretty much to the tick, and then went up and did what it should have done. It turned around and gave a short right here. We could have gotten the stop out back. It was 25 ticks on the stop out, so you would have to get a 25 tick gain here to get that back. It did give one more right here that went enough to get the stop to break even. And then it spun around, and it looks like it just gave a long here, which probably wouldn't take going into the zone like it is. And that was the YM today. So the YM had my number. I was actually negative on the YM, minus 30 ticks. The Russell didn't do too much with today, but had a few trades. There they are, all of them. The first one, we had a plus 10. Then we had a break even. Then another plus 10 to get us to 20. And then over here, we had another plus 2 to get us to 22. I'm not sure I only got 2 out of that, but I am pretty sure I got 2 out of that. I thought I got 10, but I don't know. But 2 is what I wrote down, so we're just going to go with 2. I can go check that later. It doesn't really matter. We didn't put in a higher swing there. We didn't put a higher swing until all the way over here. This is during the break. It was, if you can see all 4 lines in the ribbon, and you really have to stretch it to be able to do that. You can't really. There's only 3 lines in the ribbon. So I probably would have skipped that one. I may have taken this one right here, though, and that would have stopped me out to the tick. Actually, no, I wouldn't have, because that didn't really put in a higher swing. I think that's what I was looking for. I didn't pick that because this didn't really put in a higher swing. This happened during the break. And if I had taken that, ignoring the fact that I can't see all 4 lines in the ribbon, then it would have been profitable, of course, but I probably wouldn't have taken it anyway. It's pulling back right now. I'm about to give a trade, so let me find my DOMs and see if I can set that one up. see how I can set that one up. Hang on. Hey, you know what I did? I finally got NinjaTrader working on this machine. All right, so the bottom of this bar right now, if you look up here, the low of that bar is 5.9. So 7.9 is what I'd be buying on that. 7.9. And here it is. All right, now I don't know if we're going to end up with the trade here on the Russell. It might be. So I'm just going to minimize that and move on to the ES. All right, now on the ES, we had just a few trades here as well. All right, 4 of them. This was our first trade of the morning. Now, I almost had the goal for the day on that one trade, but I ended up taking a break even on it. If I would have bumped my stop to half a point on that, then I would have had the goal for the day between that and the YM. But sadly, I did not. And then I had a couple of stop outs, and it got me down. Then I had a stop out in the NQ, and that got me even further down. And we were down pretty good for a little while there, but we came back. On the Russell, though, we had a plus. This is not the Russell. Yes, we had a +2 right here. Then 4 more there got us to +6, and then over here 8 more got us to +14, and that's where we ended with the ES. Now, as this was coming into this thing right here, I had said this is how far back it should pull, probably up to this level right here, that being a retracement of this leg down. Then the next leg down, I thought I had drawn in there for you while I was using this right here. And I was saying the next leg down should go probably from there to there, I think. Is what I said. Yeah, from there to there would be the next leg down, if it does make the next leg down. But you can see the market is not really committed to the downside or the upside right now. Russell trade still hasn't triggered. Is the low of that bar still in the same place? The low is at 86. No, it's at the same place. The low is at 5.9. So yes, that's still the same trade. Okay, and that was all we did with the ES. Now during the break, let's go back to the ES just for a minute here and see if it gave anything during the break. Okay, it looks like it gave one trade right here, which was a really nice trade during the break, followed up by another one right there, which was a good trade during the break. Either one of those would have gotten you the goal for the day. Followed by this one right here, which would have been very close to stopping you out. If it did stop you out, it would have been to the tick. If it didn't, then you got your goal for the day on that one. Followed up by this one right here, which is okay to take. Another way to get the goal. And right now, it's just about got a short trade going right here on the ES. So the way to trade the ES right now would be 2 points off the top of the bar. It's 450 down to 250. Be just like that. All right. Now we'll get into the NQ. We'll see if either of these trades trigger. But the high of this bar, let me just move this down a little bit just to make sure. The high of this bar is at 450. So 2 points off the high of the bar is what you want to sell. Okay. All right, so we have 2 potential trades there between the ES and the Russell. Now the NQ, let's look at the NQ. All right, so we got triggered in on the Russell finally. Okay, now the Russell's got to go 10 ticks into profit above the stop to break even. All right, the ES, if it goes up any further, we're going to have to move our entry point, right? Like right there, move our entry point up 1 tick. We need 10 ticks in profit on this. It's got to get up to right there. So you know what? Let me see if I have those little alert things. I don't think I do. Anyway, it's got to get up to right here. We don't want to bump that stop to break even. All right, the NQ. We had a fair amount of trades on the NQ. 7 is what I count. And let's go see how they all worked out. Let me just do this and do Alt and Tab. So we don't have to scroll so slowly. Oops, I went way too far. There you go, somewhere around here. All right, so there was our first trade on the NQ. We stopped out. Now, I don't know how I managed to stop out on that. Because it did go enough into profit to get the stop to break even. What did I do wrong to stop out on that one? I don't know. Anyway, I did stop out on it. And I ended up with, oh, it was right here. That's why. It was over here. That's how I stopped out on that. All right, it was right there. That's how I stopped out on it. So we had minus 36 on that one. So that kind of put us in the hole. At that point, we were break even on the ES. We were plus 10 on the YM. We were break even on the Russell, and we're minus 36 on the NQ. And then we went down to minus 15 on the YM. And then we had to work our way back after that. That was the lowest we were at, I think, today, when we're minus minus 15 on the YM. Actually, we're minus 40 on the YM at one point, and we're minus 32 on the NQ. That was our low point of the day. But we made it all back. Once this did not put in a lower swing and it stopped us out, we were no longer interested in trading in that direction. All right. When we got over to here on the NQ, our next trade on the NQ was the 4-tick gain, got us to 32. Next trade after that, we went to plus 16. So that was a 48-tick gain on that one, I think. Yeah, and then the next trade after that, I thought we had 48 ticks on this one, but we didn't. We only had 20. We went from 16 to 38, and I believe this is where we got the goal for the day right here. Went from 16 to 38 on that one. And then we went from 38 to 86 on this one. All right, we triggered in on the ES trade on the short right here. And we are along the YM still, the Russell still. We got up to 86 after this one, and then let's see, we had a plus 4 on that to get us to 90. And then our final trade was right here. We stopped out minus 36 ticks. Okay, so we're minus 36 on that one, and that got us down to 54. And that was it for the morning. Now, as we get into the break here, it looks like if you could see all 4 lines in a ribbon, it would be a trade right there. I wouldn't let anything until it got away from the weekly trading zone. The first real good opportunity looks like it happened right here. And that does not look like it was an easy trade to hold on to because it went just about to the stop before it went down to 48 ticks. And the next trade opportunity would have been right here. Right, that would have been easy 48. That put in a lower swing, giving you this one right here, which would have been another 48. Now, I keep saying 48 because that's what my target is at. It's at 12 points. Okay. This would have been trade here. That would have been a break even for me. Over here, that would have been some kind of profit, but it didn't put in a higher swing, so you couldn't do the follow-up trade there. And it doesn't look like it would have been close to the 48, so I would have taken some kind of profit on that, but probably not the whole 48. I don't think it went 12 points. Then we get over here, nothing there, nothing there. Right here is the first trade, and that looks like it went just about 48. Look at 12 points, 75 down to 63, 75. It didn't go 12. We stopped out on Russell. It didn't go 12. It went 11 points. So I would have got some kind of profit on that, but not the whole 48. And then just got sideways, and that was it for the morning session. We're still in this the CS trade. We're still short on the S, but let's just go over here and take a look at the Russell that stopped out. Okay, we got long on the Russell right in here, or maybe it was right. No, we got long on the Russell. It was right here. We got long, and it just stopped us out. Finally, just stopped us out minus 25 ticks. I guess I got long on a pullback or something. I don't know. But anyway, we're short the ES, and right now we are going to bump that stop to break even, so we don't have any risk on the ES. You know what? I'm just going to use the break even button. The difference between using the break even button and putting that other order on there, one is when I put another order on there, it requires more margin. I'm going to lock in a couple ticks on this. When I put another order there, it requires more margin. And two, if I put another order there and I cancel the original one, it cancels the target as well. Okay, so all right, we're on that ES with just a couple of ticks. All right, so that was all that stuff. Now, I wanted to show you guys, I don't know, is anybody in here that wasn't in the morning session? I think some of you might be, but let me see. Oh, yeah. I wanted to show you, hang on, I'll find it. We may have it over here on this other monitor. There it is. The trade that we showed yesterday, here, I think I got it in another place. The trade that we showed yesterday with the Tesla long, it was at 325 when we showed it yesterday. The potential call options, and they had a high of $5.30 today for a 63% gain. That was straight out of the partners meeting from what we did last week. Okay. Let me see if I got a better picture of it here somewhere. Here. This shows both of them. Yesterday, right here, $3.25, and today a high of 530. Right. So what I was saying in the partners meeting last week was, in addition to futures, if you want to trade options on ETFs, you want to trade options on equities, we have all the tools to do all that stuff too. And it's pretty consistent gains over and over. Very consistent gains over and over. And I didn't bring up the question box to see if anybody had any questions about
Nothing on
YouTube.
YouTube.
Okay, I don't see any questions.
However, there are some people watching. Guys, where you see those double lines on Michael's chart, those are the same weekly trading zones that you saw on my 30-minute charts. But I just use one line. So I just like to keep my chart as clutter-free as possible. So, but each one of those is like on the YM up there where you see price ran up to the zone and found resistance. That zone is actually 43,270/275.
And this dashed red line that you see right here, that's the midpoint between the weekly trading zones, and that's often a good area of support resistance when price approaches it.
Yep.
Okay, you can see it hit it here and consolidated at it, hit it here and consolidated at it. It's gonna hit it here and probably consolidated at on the YM. The last time it hit it right here, it bounced off it to the tick. Okay, back up there to the tick, and now right back down here, probably to the tick. The ES right now is on its way down to this weekly trading zone after consolidating here at the midpoint and then moving through it. Okay, same thing's happening here on the NQ. Right, in TradingView, I have the midpoint automatically created for you. All you have to do is turn it on. You just have to check this little box right here, create midpoint. And it will determine the midpoint from the entries that you put up here in this. In here, we put your weekly trading zone values up there. Okay. So we do all that stuff for you. I wanted to, I'm hoping to get another opportunity here on the NQ. We have another opportunity coming up right now on the NQ. Okay, it's got a high here of 850. So 8 points below that would be 60.50 right here. This is what it looks like on the DOM. Okay. And the Russell, we just stopped out on the Russell. We don't have a trade here yet because the ribbon's not spread out. As long as the top of this stays there at 850, I think it's at 850, isn't it? The high of that bar is actually 825. So that should be at 825. Okay, now the high of that one is 850. So that should be at 850, 60.50 right there. Okay, the high of this bar, I'm looking up here at the top. You see where the high is right there, 68.50. So we'll leave that here for now. Let's look over here on the, I don't have anything that we can trade other than this right now. All right, so
ES is approaching a trade zone.
It is. It needs to close up. I would rather see it close up right now anyway.
Yeah, I'd like to see it close up, get into the ribbon.
Yep.
And then close
NQ
down.
doesn't look like it's going to be anything. So I canceled the NQ trade. It could still turn into something. It's got a high of 71.75. So it would be 375 is what you'd be selling on that. But the ribbon's starting to crunch up.
Possibility as well.
Yeah, we need up closes on both of them.
Mm-hmm.
Both of them. Right. So this could be a trade over here on the NQ on a down close. It'd be at 375, I think. We need up closes on both of these guys here. Those two.
Now, what he means by that is he would enter the trade at 23.75. With range bars, you know where the candle is going to close.
Here. Because we know the bar is going to close right here. If the top of the bar stays right there where it is at 72, actually 72, I'm going to enter right here at 74. 8 points below the top of the bar is where my entry needs to be waiting. Okay, and the top of the bar just moved up some more. If it
And-
closes up, it's not going to be a trade.
Yep.
Okay.
No trade.
And so we'll cancel that. But the other two probably closed up and might give us a trade here, right?
Mhm.
The ES did. And the ES now has a high here of 81.50. So subtract 2 points from that, be looking at 79.50. Looks like this on the DOM. Okay. And the YM has a high here of 20.01. So subtract 20 from that. And it looks like that. We just entered into the ES trade and we need the down close here on the YM. And that would also be a trade. Actually, the ES didn't print that last bar. I mean, the indicators didn't update on the last bar.
Oh, it didn't pull
Well,
out of the overbought.
It just didn't update. If I switch from here and back to here, that's on this one. If I switch from here back to here.
There you go.
Well, now it looks completely different. Oh, I did it on the 19 range. That's why it's different. Okay, so now we're in both of these trades. There it is. That's what we're looking for.
Yeah.
That down move right there. Okay, so we got that on the ES and we just filled on the YM as well. So we're short on both of these right now. After this goes 4 ticks into profit, we'll take the risk off the trade. See that number right there? It wants to go through that down to this one. I'm just going to put a target down there at that one. Now the YM, we need 10 ticks in profit. The ES, we need 4 ticks in profit. Oops. So the YM's got to get down to 70. And the ES has to go down right there. So the ES stop is at break even. The YM stop is almost going to go to break even. So I don't have any risk on this. And I have a target. Sorry, I don't have any risk on the ES trade. Now I'm going to take the risk off of the YM trade here in a minute too, I think. The ES, I'm just going to lock in 1 tick on that. And the YM, stop at break even. And so I'll get rid of, I'm actually going to get rid of that and use the original stop and drop it at +2 there. And get rid of that and use the original stop and drop it there at +2. And I'm going to get rid of that target before it fills me. That crap, it filled me. Okay, so now I'm going to get out of that. And I got out of that with plus break even, I think. Over here on the YM, I got out of the first part of it with +2, and then I got out of the second part of it with a break even. But the YM right now, we're going to lock in, that's 15 right there. Okay, and this is 20 right here. And I like it all the way down here at 51. That'd be 29. Okay, so we're going to get 15 or we're going to get 29.
And 20 on the Dow, on the YM, gets you goal for the day.
It does, and then some, almost a goal and a half.
It's $100 per contract, and once you've earned the right to trade 10 contracts, that's $1,000 a day. But you got to earn the right to trade multiple contracts. You add contracts with the profit you earn in the market. We'll teach you all of that. It's all in the 24/20 blueprint. It's all in the training program.
Okay, this is going to have to make a commitment to the downside. If I drop it here at 60 and I get filled there, that's $1,000. But it's sitting at $750 right now. Oops. My finger twitched. Did you see that?
Yeah. Yeah.
Unfortunately, it didn't go, but here we go. Now I dropped it. That's 20 right there. And this is 29 right here. Now I'm going to go for 30. It's got the number right there at 30 also, but we're probably going to get 20. There, okay, we're out at 20. All right, yeah, so look, the ES went down and did everything it should do as well. Both of those trades were really nice trades. I didn't do anything over here with the NQ and didn't do anything with the Russell in there, but both that trade and that trade worked out perfectly. And that's what you expect out of it. All right, on the ES, I think I got 2 ticks on the first part and I got a break even on the second part when I accidentally entered. And I got out again.
The NQ gave us a lower low. So
the NQ did give us a lower low. After pulling way back up in here and crunching up the ribbon, it gave a lower low. Now let's look at the leg lengths on that. Let's do just a little bit of analysis on this thing and see what the heck is going on. Because right now I see a leg that goes all the way down to here and then 100% retracement up to there and then almost 100% down to here. So we're getting into a triangle here. It's starting to get consolidated. It's really starting to go sideways. What I'd really like to see is this go down quite a bit more. This is the YM, sorry. The NQ is what we need to be looking at. All right, so the YM got lower highs and lower lows. All right, so the YM I like. Right, YM looks, not the YM, the NQ. Gosh, why do I keep saying that? Anyway, 60 and a, ooh, no. If this closes up, it's going to disqualify the trade. All right. It's gone up so high right now, even if it closes down. 72.50 down to 64.50 is what I'd be selling on that. When I say things like that, and I just rattle off those numbers, what I'm doing is I'm subtracting 8 from the top of the bar for you, so you know where to put your order. Now it slipped me one tick when I put it there, and my stop is probably not in the right place. But if we start going against it, it's got to go down to 60.50 right here for me to bump the stop to break even, and it should go down through the prior swing low, so it should get at least 60.50 and probably all 48 ticks on this. But if it does the equivalent of the last leg length, okay, so I'll put the stop right there. If it does the equivalent of the last leg length, it'll get down to about right here somewhere, which is fine with me. I'm gonna lock in just 1 point on this, and we're up just 1 point. All right. So what I was looking at here, the thing that I wanted to do, the analysis, the leg length analysis that I wanted to do on this when I accidentally grabbed the wrong market, was this. I wanted to compare this leg length down to the last leg length down, which is right here, which was not showing any strength. This leg length down right here, significantly less than that one. All right. And then the pullback here was smaller than that pullback, which is okay. But right now, if this does not put in a lower swing, then we have a rounding bottom right here. Okay. So if we back this up and take a look at this in a bigger picture, if we look at the whole move down from here down to here, okay, from there down to there, bang. And this retracement here was just about 50%. It was a little more than 50. And it's failing off of that. If it does not go through this prior swing low way down here, then we have, this was the bottom over here. And we have rising bottoms in the bigger picture. You know, we're looking at it right here all crunched up on a 31 range, but if we were to look at it on a 30-minute, not all crunched up, you see the bottoms right here rising. That's what I was talking about. Okay, we have lower highs and higher lows right here on the 30-minute, so it's probably gonna get stuck right in this area right here. Let me see if I can use one of these lips. It's probably gonna get stuck right in this area, right in here for a little while. And you know, in the smaller time frame, that's in a 30-minute. In the smaller time frame, when we jump back here to a 31 range, that's not horrible. There's a lot of room in there to trade. Let me get rid of this. You see, there's a lot of room in there to trade in what I drew. You know, the high of it is all the way up here at excuse me, 20,381, and the low of it is all the way down here at 20,357. So you have 30 points in there, just about 25, 30 points in there to trade. And you know, that's pretty good number of points. It's like this amount from here, right? 378 down to 346. That's about how much you have. I guess it's not a great amount. It's going to consolidate is what it's looking like. Unless it chooses a direction and starts to break out, it's going to consolidate for a little while and be pretty ugly trading. So if we just follow rules and make sure that we have a trend, then it'll be okay, right? If you don't follow the rules and you don't make sure you have a trend, well, then you're going to get eaten up, more than likely. Right now, you see we didn't put in a lower swing here, so it's doing the same thing. There's no lower swing here. There's no lower swing over here. And this is just going sideways. So the markets are not really conducive to trading right at the moment. And when it gets like that, then it's time to go look at something else. Let's go out and look at Bitcoin today. Or is this there? No, it's Bitcoin.
Tonight, make sure you watch the news. CBS just got busted in a big news scandal. So you probably won't see it on CBS. Yeah, they did an interview with the Speaker of the House,
Mhm.
Mike, what's his name?
Johnson.
And yeah, and they made it appear in the way they edited it that he couldn't back up what he said. But now he's gone live and shown the receipts, and they've got egg all over their face.
Yeah. I was watching something last night. They're scared a little bit, I think.
It is a witch hunt, man. Oh, they're scared to death. They're scared to death. And unfortunately, they're bringing out the big guns. They brought out Obama to talk to the brothers. That didn't go
Yeah.
well. They sent Bill Clinton to McDonald's and they thought he was Biden. That didn't go well. And Kamala is going to be on with Joe Rogan and Charlemagne the God. And I'm going to guess those. Charlemagne might go along with accepting only the questions they give him, but I don't think Joe Rogan will. I don't think he will.
Yeah, probably not. I hope he asks the hard questions that she just won't answer.
Yeah,
I grew up in the middle class.
in fact, I suspect Joe Rogan might go, oh yeah, sure, okay, yeah, that's fine, and then just light into her. We'll see.
Yeah, so did I. All right, so this D is the crude. It did put in double bottom. It wasn't where we thought it was going to happen, but we were thinking it was going to happen back here. We got it right here. I don't know if you talked about that already.
No, I didn't. And I want to see price get to 73 and a quarter. Guys, we have a thing when price breaks a weekly trading zone, the highest or lowest, by Tuesday morning, historically going back 14 and a half years, over 90% of the time, that means by close of the week, price will be at the other end of the spectrum. So
let me put the zones on here so you have an idea of what that means. Let me go get my zones for crude oil.
And a source shared this with me. He said instead of trading options, maybe consider a fistful of micros.
Yes.
But I'm saying let price get above 72.35 before you commit to anything. Okay. So maybe you don't get into Wednesday. Even Thursday. I mean, crude's down $3.50 today. So if it can drop that much in a day, it can rise that much in a day. This could be one of the rare times when our 14.5-year history doesn't play out. But hey, that's the truth about trading.
Yep, this is the lowest zone right here. We're still below it right now. And the highest zone is up here. This is the highest zone right up here. I believe it's only got one line in it for some reason, but 79.13. I believe that's the highest zone, right? Isn't it?
You must have messed that up, or you didn't copy and paste it properly. I don't know. One of the two. Whatever.
Well, let's just go look at the numbers. Maybe I didn't. 79. Yeah, 71.
The highest zone is 79.15/79.20.
Okay. Yeah, there's something here. 79.15. 79.20. Okay, so is that up here? 79. Yeah, 79.20 is there. 79.15 didn't show up for whatever reason. But something else.
Maybe it's just scrunched together. If you spread your charts out, maybe it'll show two lines. I don't know.
Maybe. 76.70, 76.75, 76, 76.
The lowest is 71.50/55.
Yeah, I'm just looking to see if I screw something up here. 150, 755. Nope, everything's right in there. So all your numbers look right. Everything looks right. Just, yeah. Anyway, that's the highest zone right there. And typically, by the end of the week, well, I mean, how long did it take to get down there? Right? It took a week to get down there, right?
Depends on where you start at.
8th. Yeah, well, the 8th was right here, right? So it did this in the range of a week. It went from here to here in a range of a week. We need a catalyst, is what I was saying last night in the option channel. I said some sort of catalyst has got to happen, and we have.
You're on a range chart. I don't know if that matters. Yeah. Is that what you want to be on? Okay.
Well, yeah, it's all the same, but
Sure.
but that's not all. I mean, it's obviously different when you trade it. It's obviously different, but the highs and lows are the same.
Right.
It's
I,
not
I
all the
knew what you
same,
meant.
but no, this is a bottoming action right here. It's actually a rounding bottom, and it could easily get up to the midpoint. And even if it did that, if you got up from say 71.5, 71.25, if you got up above this weekly trading zone, it should then, within 5 business days, I would think, get through the midpoint of the zones up toward the other end. Now, there have been a lot of things because we have, we're in the state we're in. I don't globally with the world issues that we have.
Right.
So some of the things that are really consistent are not going to be as consistent as they normally are because it takes one crazy thing, like another shooter or something like that. Anything like that.
Which I guess you heard. There was a third.
Yeah, but he was a Trump guy though. If anything, he was going to defend Trump, I think.
Yeah. Time will tell.
I don't know. Yeah, I don't know. I mean, who knows? He got arrested for a misdemeanor. He was carrying a magazine.
Yeah, I can't believe they just let him go.
Yeah.
So anyway, guys, just one last time on that crude thing. I want to see, and this is in the discussion group, so I'm on record. I want to see price break above 72.35, and that's when I may look for my fistful of micros.
Miles. Yeah, I was thinking the same thing. Miles, to answer your question, I did not, but there is something I want to show you that I wasn't able to show you before because I finally got NinjaTrader put on this machine, and I actually have it running here. And if you right click, I can show you how to put this on, but I'm sure right click and go to strategies. We have a strategy in here that you can add on. You click to add. And in here, this is a 7 range, so I would select my stop to be a 10 tick stop or a 10 by 30 bracket. Set my offset to be 8. And all that is pretty good. Why don't you check enabled right there? This is actually too much. I don't like the 400 size. Do the 200 size. Okay, and the panel height, do 25 and button font 12. That's what I like. I'll hit apply. Okay. So what this is, Miles, is a thing that keeps track of the range bar, keeps track of the top and bottom of the bar. Did I ever show this to you? I don't think I ever showed this to you, right? And it keeps track of the top and bottom of the range bar. So if you wanted to go long on a bar like this, if you want to go long on an up close, you just have to hit buy like that. And it keeps track of where the order needs to be based on where the bottom of the bar is. So all that stuff that I tell you where I have to move my orders around all the time and I'm keeping track of where it is and I got to move it up and down, up and down. This actually does all that for you. Okay, now this is my first time using this on this machine, but yeah, see, it puts it in the DOM too. It's right there in the DOM. Now the thing about it is once it triggers, you want to use this to manage the trade. You can use the DOM, like it's going to trigger and just put us long. So my stop is here and you can manage it on the chart. You can manage it in the DOM, but when you exit the trade, you want to exit it over here. Okay. Like I can lock in profit like that, moves it on the chart, moves it in the DOM. And if I just put us in a trend right here, put us in an uptrend, and we start taking profit on right here. This even has a break even button right here. You see that? Even has a break even button. You can hit break even on it. And move my stop to break even, you see? So if I drag this down to here right now, let me slide this over here so you can see the whole thing happen. Okay. And I put it there and I hit the break even button. Pink. It moves my stop up to break even. So that is one feature that we have for NinjaTrader that we don't have for anything else. Now we can't do it. We can't do it for TradingView because TradingView does not update intrabar, and you have to be able to keep track of what's happening intrabar for this to work. Okay. But you can do it all just like this. And if I bump this target all the way down here, then we're out of the trade. Hit exit, we're out of the trade. So now if you want to put a new one on, now right now, if you wanted to go long on an up close, just hit buy, and it keeps track of where the bottom of the bar is and where the top of the bar is and all that stuff. All right. So we'll have to get together and I'll show you how to access this and do it all. Okay, so right now you can hit break even, throws it at break even, and then you can manage it on the DOM if you want to. Okay. All right. With that, guys, I'm going to wrap it up. For this session. I've run over a little bit, but I wanted to make sure you understood that, Miles. And is Graham in here? Graham's not in here. All right. Anyway, that is it, guys. With that, I'm going to wrap it up. Thank you for watching. Let me show you how to do this. Go here to, if you've not taken a free trial with us, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Click on that purple button. It's going to bring you to this registration page. Just fill out the form. Down here at the bottom, if you have NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. All right. If you're not going to use NinjaTrader charts, if you're not going to use our stuff on your charts, we don't need your machine ID. All right. But if you use Ninja and you want your stuff on the charts, give it to us. Gives you TradingView login ID as well here. We need your TradingView login ID to enable the indicators for you on your TradingView platform. All right. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park.
Magic words.
Yes.
So now I will this, and then I will say my magic words.
All right.
Oh, and by the way, anybody listening on the YouTube channel today, I'm dropping a lot of frames. Now, this happened the other day, and I rebooted my modem and my router, and yesterday we didn't drop a single frame the entire 2-hour broadcast. But today we've dropped a bunch, so I got to figure out what's wrong. I did a speed test on my internet. It's not that. I've got 60 megabits up. That's more than enough to push this radio show.
It sure is.
So, anywho, recap of the morning session.
Today it took 59 minutes and 10 trades to get to $1,150.
Good job. Way to hang in there. Now, guys, that should be an incredible lesson for everybody. Because I know a lot of mornings you see Michael, one trade, 3 minutes, couple grand. But that's just how it played out that day. Some days it's not going to play out that way for you. So you got to hang in there. Okay? You got to hang in there. How many of those, do you remember how many of those were full stop outs or how many were break evens?
I can tell you. Out of all my trades, or just the ones in the beginning?
Just during the morning session.
Looks like I had one break even on the ES.
Or maybe up until you got gold for the day. Maybe that would be the best way to do it.
Yeah, well, until I got the gold for the day, I had 2 stop outs on the YM. I had 1 stop out on the NQ.
Those are full stop outs.
Full stop outs, yeah.
Okay.
Minus 25, a minus 25, and a minus 36.
Okay.
So I was down pretty good at that point.
Now, but what did he do? Did he bang his head on the wall or throw his monitor out the window? No. He just kept looking for the next viable opportunity that lines up with our rules. Because we know that over time, what we do actually does work. So the lesson for today is you got to hang in there. Because when you're new to trading, if you get stopped out twice in a row, I know it's really hard to put the next trade on if you're already trading live. Okay? With us, you start out in demo, and then you earn the right to go live and blah, blah. I won't go into all that now, but okay. Thanks, Michael. Good job. Right. Way to hang in there. See you later.
All right. We'll see you later.
All right, guys. We're going to pick up where we left off, and that was on the NQ. Okay. Again, the vertical lines separate today, Tuesday from Monday. Back over here is Friday. Now, last week, of course, we had different weekly trading zones. The new zones come out every Monday morning at 6:15 a.m. Eastern. Price always reverts to the mean. In other words, the price is always going to pull back to the green line, whether from below or above. The pullback holds more often than it doesn't, but eventually it will trade through. Now here it traded through, it ran right into the weekly trading zone. Support. Support will send the market looking for resistance. Now the high of this candle was 26.59, so we missed it by like 7 ticks. I was looking for this high right here. Okay. But still, you only need 5 ticks to get your go for the day. So, anyway. All right. So, when the market finds resistance, as it did, it's going to look for support. So, it came down through the zone. And we had a lot of slices today. The market is unusually volatile. And then it came all the way down to the zone here at 2321/22. Support set us to resistance, back to support, back to resistance, back to support. See how you got this triple bottom going here? 1, 2, 3. Support. So this time price may overcome red and falling. If so, look for potential resistance at that high, at the zone, at that high, and then up here, this would be resistance times 2. BBC and the weekly trading zone. Remember, once the weekly trading zones are published for the week, they don't change in any way whatsoever. Okay, they're carved in stone. And you see how the step line on the way down, you had the perfect stack. Price, step line, red and falling. When the step line crosses red and falling, then you expect a retracement back to the BBC. And again, the pullback holds more often than it doesn't. If price were to trade through the BBC, then right here, you've got a bearish cross where the red line gets below the green line. That would be potentially good resistance. And then right above that, you got a zone. Okay. But remember, when the step line crosses, it hasn't crossed yet, but you can already see what's happening with this green candle. And the higher price goes, that step line is going to cross. And red and falling may curl up and turn into blue and climbing, like this. That means you got a runner that might this time make it through the BBC. Okay. All right. Let's go back to the daily chart one last time here for those that joined late. Remember what I said about looking at the daily chart at the beginning of your trading session? Short trades were the order of the day. You're looking over the shoulder of the institutional traders, the ones with account sizes that allows them to trade in such size, they actually move price. Okay. And so you can get a free look over the shoulder of the deep pockets by just going to your daily chart 2 minutes before you drop to your smaller time frames and start trading. Now, not only can you see what they're doing, but you can identify where major areas of resistance are, where major areas of support are. Right here is support times 2, step line and the 38% fib extension. Below that, blue and climbing. Below that, the 24% fib extension. And then below that, the daily BBC. No matter what time frame you're on, price always reverts to the mean. And the pullback holds more often than it doesn't. Whether you're pulling from above or pulling from below, pullback holds more often than not. Okay? All right. We already covered the YM. Now we still haven't got down. I drew this window of opportunity yesterday. Okay, price never got there. That's okay. You can draw windows of opportunity wherever you find them. You only become concerned with them when price actually gets there. Now, let's say price trades lower and fills the window of opportunity I drew today, and then takes out this low right here. Does that mean this would still be a valid window of opportunity? That will be a valid window of opportunity. If it takes a week, a month, a year, a decade, okay? Nature abhors a vacuum, and apparently the markets do too. So you've got a vacuum here, because you've got a low here and a low here, and that hole has not been filled. Maybe you can think of it as a jigsaw puzzle where you got to slide that piece in where it belongs, okay? And then you got the same thing down here. Now, the reason I made it as narrow as I did, we could actually open it up a little bit. I think I might have messed with it when I was dragging it. See, you see these lows here? They're below that low there. So you got to break those lows. Then you enter, and then you exit before you get to the bottom of this candle, because that's potentially going to be support. But 42,960, 42,920, that's 40 points. You only need 20 points to get your goal for the day. Will this remain a valid opportunity all day today? Yeah. And tomorrow? Yeah. It will be a valid window of opportunity until price enters the window. Okay. Works the same on every market, every time frame. It's not some kind of trick. It's not some secret. It's not magic. We could play it up that way if we wanted to. But I just want to be honest with you. We're trying to show you how price flows and how to be able to determine where price is most likely to find support and resistance. Do that with the weekly trading zones and with the BBC and the step line and red and falling. And this candle here was red all the way down until it got into the area of the bullish cross. Now this target right there, see how that's just right where the cross took place? Quite often it will go there, but it got to the area. And that was enough to send it all the way back up to the zone. Resistance, which sent it all the way down to support in one 30-minute candle. Okay. What is that? 55 points from zone to zone. Is that right? No. That is not right. That is Hey Siri, subtract 4,315 from 4,003. Never mind, I messed it up. Let's try it again, okay? Hey Siri, can we try it again?
Sorry, there is nothing to repeat.
Hey Siri, subtract 43,015 from 43,270.
It's 255.
Hey Siri, multiply 255 times 5.
It's 1,275.
Thank you. Okay, so from zone to zone with one contract, what she said, $1,275, I think. Now, that's a good day's pay. But imagine if you've earned the right to trade 10 contracts. Whoa. That's a really good day, right? But maybe you won't ever trade contracts. Maybe you'll get to 5 contracts. The blueprint starts you out in demo till you qualify to go live. You go live with one contract. Once you go live with one contract, your goal is to increase your account balance by $2,000. Once you do that, the blueprint gives you the green light to add a second contract. However, the first contract is funded with your startup capital. But the second contract is funded with profit you earned in the market. Blueprint will give you the green light when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. But you only add one at a time. When it's time, and you only add with profit you earned in the market. You have the discipline to follow that. And the discipline to put the mouse away when you get your goal for the day. You just might be a trader. Now, there's an interesting development here. Okay. Red and falling has gotten directly below price. So now it was our friend on the way down, remember? But now it's potential support. But if price can break through that and take out that low, boom. What if price rallies up and gets above the BBC? Then you just got to go look for a window of opportunity. Like that. It may not be picture perfect, but I think it's close enough. 43, let's just say 357, 329. So let's call it 350. To 330. It's 20 points. Goal for the day. And there should be no hitch in the giddy up. Okay? That's why if you learn to use the logic alerts properly and the weekly trading zones and everything else that we teach you, and there's not a lot. Okay? I've seen some trading programs and strategy. Oh my, they're so complicated. You only need to know enough to get your goal for the day. If you never learn what the trend is, no big deal. Or the tricks, or the RSI, or the MACD, or the stochastics. Okay, I'm not knocking those things. They all do, I'm sure, what they were created to do. But do you need them to get your goal for the day? No. What you need is to understand market structure. And market structure tells us that if price takes out that low, it's going to probably get to that low. But I like to be conservative. Okay. That's why the top of my window is not butted right up against that low. And that's why the bottom of my window isn't butted up right against that low. I call it conservative. You can call me chicken. I don't care. Cock-a-doodle-doo. Oh boy. All right, the Russell. Price always reverts to the mean. Pullback holds more often than it doesn't. Price gets to a zone, we expect resistance till proven otherwise. 70% of the time you'll get consolidation. Then we traded below and we almost made it the short target. Okay, didn't quite get there. Okay, this is what we were shooting for. Doesn't matter. This one candle right here opened at 22, we'll call it 61, and dropped to 22.58. That's 3 points. You only need 2 points to get your goal for the day with the Russell. All right, this is where we left off. NQ. Price comes to the BBC and the pullback holds, just like it did here. Support sends the market up to resistance, red and falling. And red and falling takes us below the BBC to the zone. And we found support. Support sent us up to resistance. Okay. High of this candle was 26.59. High of this candle was 26.66. So we missed it by about 7 ticks. All right, then down we fell rapidly. This is some of the smallest 930 candles I think I've ever seen. But nonetheless, here's the 10 o'clock candle, and we had no economic news today. That may be why. Anyway, down we come to the zone, which is 321/22, and we've got we got a double bottom right there. Step line is trying to cross red and falling. If the step line manages to cross red and falling, then expect price to revert to the mean or pull back to the BBC. Now, crude, the one we've been talking about a lot this morning. Okay, now Michael was showing you on a range chart. I'm showing you on a 30-minute chart. So you can see that the double bottom that I talked about in the live training room, we never put in a double bottom. On the range chart, see, that's why I'm telling you, you got to learn multiple time frames, okay? Look at the daily for 2 minutes, and then on another monitor, have the 30-minute as your roadmap. If you use what Michael teaches you in the live training room, and it's congruent with what the 30-minute chart is telling you, your life could get real simple. Trading's not easy. It can be simple. Now we have a situation. Got a red candle. We hit the BBC. We expect it to be resistance. Red and falling has turned to blue and climbing. Okay. So price is either going to come down and bounce off that and head higher, or it's going to come down and create a double bottom here, or maybe here, or maybe it just keeps falling. My point is, we've hit the lowest weekly trading zone by a Tuesday. Okay. And based on 14.5 years of history, when we hit the highest or lowest weekly trading zone by Tuesday morning, the end of the week, there's an extremely high probability we'll be at or near the other end of the spectrum. Something to keep in mind, but not to get yourself confused over. Okay. E-minis are man-made products. Crude, gold, silver. God made those. Man made the E-mini so you could trade these products. But Michael intimated this briefly when he was talking. You have external influences that can affect how price moves. This tension in the Mideast, if there was suddenly some agreement on a peace talk or, any number of things on a fundamental basis, could send this thing rocketing higher. But I've already cast my lot and said I want price to go to I want to get above 72.35. That will be convincing enough for me that price is going to try to get to the other end of the spectrum. So what am I going to do for now? Hang on. Well, I'm not going to trade crude. See, that's the beauty of our methodology, is we trade everything exactly the same. Same indicators, same rules, same everything. That's why I say trading is not easy, but it can be simple. Or it can be horribly complicated. When you got 19 different indicators on your chart, half of them are yelling at you to go long and half of them are yelling at you to go short. That'll drive you crazy. Okay? It doesn't have to be that way. Support, resistance, to support, resistance. And this was the final candle yesterday. I mean, this just kind of came out of nowhere. And this was the first opening candle last night, first 30 minutes. Today's the Tuesday session, but it began last night, Monday night at 6 p.m. Eastern here in the U.S. See that down there at the bottom of the chart, 1800 hours? Support. Bounces us up. Resistance. Support. Resistance. Support. Resistance. Now see here, we had a series of lower highs. High, lower high, lower high, lower high, lower high. Good indication price is going to go lower. So yeah, we hit the short target. We almost hit it here. We missed it by it's a low. We missed it by 5 ticks. Missed it by 4 ticks. Hit it. You only need 10 ticks to get your goal for the day. So this opened at 70.90, and down this one candle, just down to the target. Forget the fact that it spiked it, but just that little part of the candle right there. 70.90. Come on, messing with. All right, I guess we'll call it 70.90. This is 70.91. Anyway, this is my point. From the open of that candle, just to the target, okay, $200 per contract traded, right there. Once you've earned the right to trade 5 contracts, that's $1,000, okay? But it's not gonna. This is no get-rich-quick scheme. You got to show up. You got to do the work. You got to follow the rules. You got to have the patience. You got to have the self-discipline. Now, we can teach you. We can provide you with the tools to do the job. But what we can't give you is patience and self-discipline. That's between you and God, okay? You guys got to sort that out. Now, I'm gonna be honest with you. The really smart guys that come through here, I mean truly, high intelligence kind of guys, our methodology it's like it's too simple for them. Okay? Would I rather teach a professor at Stanford University or a farmhand who's still got dirt on his boots? I'll take the farmhand every time. Why? Because when I tell him that price goes up to the zone, it's most likely going to be resistance. And when it drops to a zone, it's going to most likely be support. And you know what he says? Okay. But the professor at Stanford, he wants to know why. Well, I don't understand why it stops there. And, anyway, you get the idea. Just trying to have a little fun. All right, we consolidate. And if anybody's a professor at Stanford, I'm not insulting you. If you're a farmhand, that bell's for you. Because you know what it is to work for a living. Not that professors don't work for a living, but you know what it is to work by the sweat of your brow. Okay? Now look, the step line's crossed, balloon climbing. So what do we expect? What do we instinctively know? Price is going to try to drop back to the BBC. Now, in the Logic 247 channel, where there's over 18,000 individual handcrafted alerts, every one of them is a trend trade as determined by the 30-minute chart, the BBC, and price. If price is above the 30-minute BBC, I'm only going to put out long alerts. If price is below the 30-minute BBC, I only put out short alerts. Okay? Support, resistance. We spiked it down here. Oh, on support. Went all the way back to Thursday. Thursday determined Monday's low twice. And it gave us our target for last night. So we're below the BBC, we expect lower prices, and we get them. And not only do we hit the target, we make it all the way down to the weekly zone at 2655/56. Support sends us to resistance, consolidate, we get a leg and a retracement, a leg and a retracement, leg and a retracement, and a leg. And we spiked the zone, but it became good resistance, just like it did yesterday. This is Friday over here, so we're not concerned about that. These zones were published yesterday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. So we got resistance overhead because balloon climbing is directly above price, but the step line is crossed. So, and now on a 30-minute time frame, that would be a counter trend trade. I don't recommend that you trade against the 30-minute trend, but you can. All right, silver. We opened at the zone and consolidated for hours. Remember, these are 30-minute candles. That's quite a few hours. Till about 11:30 last night. And then we hit the short target and went down to the zone, to the tick. This was the Sunday night open, to the tick. Tick. Support will always send the market looking for resistance. Found it at the zone. That resistance sent us back down to here. Now look at the horizontal line on that cursor. Let me really look at it. Do you see the points that it's touching? That support sent us back to resistance, back to support, all the way up to and through the target. And the high of the session, this is Tuesday, this is Monday, this is Friday. The zones are different, but the market structure is the same. Okay. This high right here just barely peaked above. I like a tick. See where blue and climbing turns to red and falling? That's really important. Okay. Step lines crossed. Looking for a retracement. This is support times 2. Got the BBC and the weekly trading zone. Pull back holds more often than not. But I want you to observe this chart, okay? Look at that wick. See, price went all the way up here and got slapped down. Here, price went all the way up here and got slapped down. And it got slapped down, and it got slapped down, and it got slapped down, and it got slapped down. What I'm saying is, look at all these wicks, okay? Something out there in the universe doesn't want price to get above this area for now, okay? So, go with the flow. Find it's just more fun than fighting the flow. I mean, if you're a strong swimmer, you can swim upstream. I'd rather just float. All right, one more market. Euro. We opened and ran right into resistance at the BBC. Blue and climbing turned to red and falling, and that took us right down to the target. Overshot the target a little bit. Support sends us to resistance. See that high right there? See that? Got a double top at a high put in yesterday. And that double top sent us back down to the short target a second time. Oh, and look where we're at on the daily. We're almost, remember, we said, now, at the beginning of the broadcast, if you missed the beginning of the broadcast, you owe it to yourself to go to youtube.com/CFRN. Watch the beginning of the broadcast when we first looked at the daily chart. I think the red candle was like maybe up here. I said, now the first area that we expect support will be at the 38% fib extension. And I said, write that price down. Okay. What was that price? It looks like 58.62. It's kind of hidden back there. Here, let me stretch it out. Yep. It's 58.62. Okay. I said, now the step line is right at the 38, so that's going to be support times 2. If we don't get a bounce here, then this price right here, 58.41, no, 58.36, 58.36. See, it's hidden up under there. Okay, that's your next major support. Below that's the 24. Below that's the BBC. So I hope you see the benefit of looking at the daily chart, no matter what you trade, and jotting down these very important numbers. Maybe you don't know how to put on fib retracements. Maybe you don't know how to put on fib extensions. Well, good news. We'll be happy to teach you how. Get through your 5-day free trial. Make sure what we do is right for you, and become a member. As a member, you'll not only have access to 2 hours of live interactive training every trading day, you'll have access to private one-on-one mentoring, no extra charge. Strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, even options. Price flows the same from support to resistance, back to support, back to resistance, over and over, again and again, never-ending cycle. As a passport holder, you'll get the Logic 247 alerts around the clock. That's going to teach you how to really read a chart and find these windows of opportunity. You get the concierge trade alerts every evening when they're published. Monday morning at 6:15 a.m. Eastern, you'll get the weekly trading zones for the week. Put them on your chart. They're carved in stone for the entire week. See, even though we're below the lowest zone on crude right now, I'm not rushing out to, cover my backside because, oh, that's embarrassing. It's not embarrassing. Price is simply below the lowest weekly trading zone. Is that a rather rare occurrence? Yeah. But it's the truth about trading. Okay? Everything a trader needs, all under one roof, one low price. Now, when you find out what that one low price is, pick yourself up off the floor because it's going to be a whole lot less than what you think it's going to be. And then ask yourself, how much money have I lost trading in the last month, the last 3 months, the last 6 months? I guarantee you've lost more money trading than what it costs you to become a passport holder. So, the ball's in your court. MyTradingIQ.com, 949-42 Emini, support at CFRN.net. All right, we're going to wrap it up with our good word for the day. Yesterday was cock-a-doodle-doo. Now, sometimes people will say, hey, how you doing, man? And sometimes you say, I'm hanging in there. Or maybe you say, I'm surviving. Okay. God didn't create you just to survive. This isn't like one of those television shows, Naked and Afraid. All right. God created you to flourish. Psalm 103. Chapter 100, verse 3. It is He who has made us, and not we ourselves. Do you need motivation today? Take a look at the palm tree. Number one, you can cut it, but you can't kill it. The minerals and nutrients most trees need to survive are found on the surface, just below the bark. So when you cut them, they die. But not the palm tree. Its life comes from within, so it flourishes even under attack. Listen, we have this treasure in earthen vessels. 2 Corinthians 4:7. How wonderful! Even though the earthen vessel may be cut and wounded, the treasure within is secure, beyond the enemy's reach. Number two, a palm tree will bend, but it won't break. Tropical winds can blow most trees away, but not the palm tree. The stronger the wind, the further it bends, sometimes all the way to the ground. Yet when the storm ceases, it straightens up again and is actually stronger in the place where it bent. Now, apply that to your life, and what an incredible picture. We were made to bend, but not break. Colossians 1:11. Being strengthened with all power according to his glorious might, so that you may have great endurance. Here's number 3. Remember, we're using a palm tree analogy here. Point number 3. Its depth always exceeds its height. What? Now, you've seen some tall palm trees in your day. Probably. At least on TV. But the depth exceeds its height. While the roots of the average plant go only a few feet under the ground, the palm tree's roots can go down hundreds of yards in search of water. In Psalm 42:1, David said, "As the deer pants for streams of water, so my soul pants for you, my God." Go deep. Work on your own connection to God, and you'll never be uprooted or barren or blown away. Now, this was part 1 of Are You Flourishing? Tomorrow, we'll get into part 2. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.